Hello traders, this is T-Team Tammy from Liontroop Global Associates. We're currently looking at USD JPY on the weekly chart. So now, in today's lesson, we're going to cover what we call the T.L.S method. So in the T.L.S method, we first look at our trend, and then secondly, we look at our support and resistance levels, and then thirdly, we look for price action confirmation signal. So when you open a chart to first analyze, you should understand whether we're moving sideways, we're having an uptrend, or we're just moving downside. So the market is mainly moving in three different kinds of ways, which I just named. So since we want to establish our trend on this chart, we can look at the left side of our chart and look at this candle here, which formed 3 weeks ago. So after we hit 130 here, this market melted and collapsed and went lower. And you can see that we broke 112 and we ended up breaking 111. So we also have our moving average to help us with understanding or seeing our current market momentum. So once our 8-day moving average crossed below our 21-day exponential moving average, this was showing a whole lot of bearish momentum over here. They are still crossed, as you can see. So now let's drop down in time frame to get a better view. So now we've dropped down in time frame and we are on the daily chart. So here on the daily, it's quite clear that after we had the crossover to the downside, now our 8-day moving average was acting as our dynamic support and resistance. So the market goes through two different phases. We have a push and a pullback. And as you can see on this chart, we had a push to the downside, which ended up breaking 111, and we had a pullback to our dynamic resistance, which is our 8-day exponential moving average. So we failed to break above our 8-day moving average. Why? Because there was a whole lot of sellers selling into this market and they won the battle. So yesterday's candle, as you can see here, it rejected to break above 111 and rejected to break above our 8-day moving average. So this was an area of confluence. We can just draw a shape around this zone to at least highlight our area of interest. You can choose any color. I'll just choose gray. Yeah, just like that. So you can see that we failed to break above. And now to get entries here, since we have our trend which is bearish, we have our level of support and resistance. In this case, we're looking at our resistance because we failed to break above, which is 111,000. So now we're looking for a price action trigger for us to enter into this trade. So now let's go to the 4-hour chart. I'm sure we can find something exactly. So now let's zoom out. So now here we have a short-term descending trend line, as you can see. Can you see that? Which we have our lower highs, lower highs, lower highs, and our recent lower high here, which we failed to break above. So here on our recent lower high, we have what we call an inside bar pattern. So here on the inside bar, we have the mother candle and the baby candle. Hence we call it the inside bar because it's inside the previous candle. So there are two different ways to enter into this market right now. We can wait for a break below our mother candle, which is a more safe entry, or we can wait for the break below our baby candle. As you can see, I've already entered into this market. Stop loss just above, doesn't have to be extremely high. So if the market breaks above our descending trend line and close, I'll know early that I was wrong on this trade and the market didn't cooperate. So now in terms of targets, we're looking at 110, 0.19, and our stop loss is at 111, 307. Our risk and reward is 1:2.21. So yeah, please feel free to ask us questions on the comment section, and don't forget to subscribe and like this video. Team Telu from Liontroop Global Associates. I hope you're going to find this video very helpful.